Hello and welcome to a very special episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted to have into this studio a crew here who are absolute experts within the markets field, and we've got a great conversation to be looking at what's happening throughout here today. So Himesh, Asim, Rob, lovely to have you all in here. Thanks for joining us today.
Thanks.
How are you all?
Good. Yeah.
Excellent. So this all dates back to a conversation or a post I think on LinkedIn that Himesh put out there, and it caught my attention. It was trends in HFT, and I said, you know what, that's going to make a great episode. You've been on the show before. Rob, you've been on it many times as well, various different stages. It's a first for you, Asim, so great to have you in here. Thanks for joining us. And I thought, look, this is something that we can talk about. You brought a crew together with you this time out, and it'll be a great conversation to be having it. So let's start off with some introductions. Himesh, let's go with you first. Tell us a little bit about yourself.
Himesh Soneji, got my own firm called Tech Advocates. I also work in business development at TNS and also now Black Horse Systems as well. So very much in the sort of trading technology space.
Fantastic.
Asim, Farooq. I do business development at a prop trading firm, look after my traders and deal with all the relationships externally. So
fantastic. Great to have you on. Rob.
Yeah, thanks Toby for inviting us. Rob Lane from London Stock Exchange Group, or LSEG, as most people know it from. Worked there for 4 or 5 years, very much in the low latency area. Prior to that, we're at vendors that have always been kind of in the low latency market data or infrastructure place. So great to be here.
How is it that sort of time already that you've been there? So it feels like yesterday that you joined that business. But listen, lovely to have you all in here. So lots to cover today. We're going to be talking a little bit about the political landscape. We're going to be talking about the tech landscape. We're going to be talking about everything that's moving on in terms of geographies. And it feels like at a time right now that there has never been more evolution in terms of the financial markets across all of these different spheres. We're going to start off with the strategies and such like. So your post was trends in HFT trading at the stage of it. We're seeing sort of evolution and strategy around that sort of area as well as shift that's happening at the moment. Yeah. Set the scene.
Yeah, so look, I think when we're talking about the different types of strategies that sort of trading firms are using out there, it kind of varies from like really slow click trading, you know, fundamental stuff. Is Tesla going to go up or down? As we know, it's gone down. But it goes all the way up to the super high frequency, really quick, you know, 2-pair correlated markets, kind of really fast execution play. What we're seeing is, you know, predominantly that's being shifted from that sort of super latency sensitive high frequency world to a bit more of the, I wouldn't call it slower, I would call it more methodical strategy. So they're taking things like, you know, lots of data sources, lots of rich tick history, you know, and they're doing a number of calculations for not just looking at 2 instruments, they're looking at how the market is evolving over a given period of time, the alpha duration, how long is that alpha duration? That can be microseconds, that can be milliseconds, it can be days. But we are seeing that there's this shift with a lot of the trading firms, the electronic trading firms, which are less focused on that super fast high frequency space and more looking at this, you know, really considered high calculation, you know, building a proper strategy around, you know, a rich data set and then executing for a different number of reasons in the market. So, you know, that doesn't necessarily mean that latency is not important, because when you're executing, you still need to be quick in the market. But it means that they're not just looking for a quick market data tick and a quick execution out. You know, the firms are evolving out there.
And that's something you're seeing as well, isn't it?
Yeah. So I think we're certainly seeing everything moving away from trying to focus on the microstructure of every tick by tick sort of movement to more of a bit more of a statistical startup stuff. So I think it's been a tough time for market makers over the last couple of years, and I think everyone started to shift towards a direction of actually let's use our market making tech and then let's focus on some of those longer term alphas. There's multi-hours, if it's multi-day sort of time horizons, and you've got like a good setup to be able to just kind of envisage that. So you're taking in more data, you're building new models and new alphas. So I think that's kind of where we've also been seeing things ticking around.
That sort of breaks into your world as well, Ron.
Yeah, definitely. If I think back a couple of years ago when we were looking at where we wanted to go from a market data aspect, a lot of talk about HFT and FPGA and nanoseconds, etc. And I think, I'm pleased to say, as we sit here 2 years on, it kind of reaffirms exactly what you guys have just said. We've seen quality rather than that nanosecond kind of second latency. People wanting to see tick by tick. We've seen the exchanges kind of going more sophisticated on that. So therefore, we've had to keep up with it. So definitely seen it. I say low latency for me is still kind of the nice word. It's still quicker and faster than the consolidated aggregated feeds, and people need that, but it's quality. It's making sure that we're able to deliver every single tick, collect every single tick, to make sure help firms to trade accordingly.
I think there are going to be markets like, we know Eurex is very latency sensitive. We know a lot of the players on there are really focused on those nanosecond, single-digit nanosecond scenarios. But I think it's, perhaps some of those firms are still focusing on that, but they're diversifying away. And I think it's that blend of trading strategies that we're seeing now.
Yeah, you're never going to... These firms are always going to do this stuff themselves. They're always going to be at the top of that triangle. And again, it's best to leave those guys. They do a fantastic job. But what we have seen is obviously more and more people kind of going into that middle kind of space, that middle part of that triangle. And that's where it comes into what I would say higher frequency or lower latency to help them. But again, the FPGA, that tip, that triangle is definitely still there, but definitely not something that's as commoditized as it was or even talked about as much.
Yeah, well, it's an interesting shift, isn't it? I mean, I remember when we first started speaking 15 years ago about this sort of stuff, it was all about speed, and that was a race that everyone was getting involved in, a race to zero latency. Sort of springs back to mind, 2010-ish or some like that. We were first speaking your incarnations on that. And there's a FinTech Focus that went out today, which was talking about a move from exactly the same conversation, a move from speed to quality, and that's absolutely what you're saying.
Yeah, I mean, in terms of having all of the tech stack there, and then shifting towards a bit more of a probably medium frequency sort of time horizon, where what you're looking at doing is, instead of doing pairs, you're now looking at a ton more instruments. So you need a lot more computational power. You need the ability to be able to place orders very well, so you can still compete for fills, and you can still kind of you can capture spread, you can take alphas. So what we're kind of seeing is you use your market making tech stack, but then you've got an overlay, like a much more statistical overlay, which is saying, okay, look, we're gonna we're basically expanding this in a bit more of a systematic way. So I think it's a bit of a mix now, is what we're trying to get to.
I think that's the thing, isn't it? It's like where's the competitive advantage come from? And I think we've seen that sort of that conversation evolve over time. Tech plays into it. We've talked about right. Is your advantage speed? Is it quality? Is it productivity? Where does it all fit within that? If we're looking now about where the wins are for businesses within this space, you'd say it's that, I guess what we're saying here is that mixture of quality but still the need for speed that exists behind it. Is that fair to say?
Yeah, I think it is. I mean, one of the things we see at TNS as an example is when we're talking to firms, it's obviously they do talk about our latency, and they do, they're always interested in our layer one and all those sorts of things, and we do have a lot of firms that are utilizing that. But it is, they understand the quality, coming back to that quality point, is so important. So if you don't receive your market data feeds, you're in trouble, right? Because that throws off all your algorithms, all your statistical kind of models, everything. So when we are talking to customers from a TNS perspective, we're talking about our diversity as well. And we, the way that we operate is we're always low latency on the A side, and our B side is always diverse. So it's not always the lowest latency, but the way that works in terms of delivering data is you need diversity. Yeah. So we make sure that we are always delivering market data feeds. That's I guess we're a critical component of the market now. Rob and I work together from an LSEG and TNS perspective, and they rely on us to make sure that our network is up all the time. Yeah. Because that's the quality of data that they will be essentially representing to the trading firms out there, like Asim's or like any others. is going to be of huge importance, because if the quality of the data isn't there, then how is the models going to be accurate to when they train?
Yeah.
So it is such an important fact, and as you said, it's grown in importance ever so more.
Well, quality of data is a massive.
Yeah, I was going to say, to me, there's kind of two angles. There's what I would call the real-time side of things, so making sure you can deliver it as quick as people want it is maybe a better way of putting it. And then there's basically the historical side of it. So not making sure you miss a tick, you're making sure you store it and then collect it and make it very available to trading firms so they can then back test and kind of validate the market, whether it's microstructure or on their algo. So again, to me, there's two sides. There's the real-time side, which definitely is, again, you have to make sure you're quality, you're up and running, your infrastructure, you're not missing anything. Again, don't necessarily have to be kind of, in my opinion, that nanosecond FPGA all the time. When it comes to historical data, you have to be. You have to collect every single bit. You have to do nanosecond timestamping. You have to be in the right colo. You have to collect it. Albeit it's historical data, you deliver it at the end of the day or intraday. It's the two sides. So there's a slightly different angle depending on if you're talking real time or historical. But absolutely, it's key not to miss anything.
Yeah, I mean, your alpha research platform is only as good as the quality of the data coming in.
Yep.
And if you've got a gap, it just throws everything off and you're just left behind a little bit. So I think that the process to get data in, so either buying it or capturing it yourself in Colo, and then going through that process to scrub it and clean it up, and then make it available for researchers to go and actually do stuff with it. That's a really, really, really important process now. I think that's probably the most important process in the firm.
Why do you think that is now? Because to me, there's a perfect storm behind that as to why data has become, and the quality of data has become more of an important conversation. But it feels like it's never been more sacrosanct now. And my gut tells me that there's, with the conversation around AI coming in, that's driving the need for quality data. Every time you talk about AI, you're talking about it's useless without the data behind it. Is that what's catalysed this, or is this just an evolution? Or?
I think it's a bit of an evolution. I think there's a lot more players out there which have just been getting smarter and smarter and smarter. So everyone's competing for the same piece of bread out there, and with it. You can't really be left behind. You have to have good resiliency. You have to have good backups. You have to have the data. You have to have good models and a platform just to be able to stay relevant and compete. And your strats to do well. And then on top of that as well, the AI piece is becoming a lot more important. I mean, there's a lot of firms out there that take news feeds. They take the news feeds, they build some sentiment off it, and they trade off that sentiment. And a lot of those firms may or may not use AI to do that. Piece of news feed comes in and AI says, yeah, this looks good, you should trade off it. This is a signal, you should do this. So I think it's just like slowly a bit more of an advancement about it. Whereas, piece of news comes in, where is the market? What is the signal? Can you execute fast enough? Can you execute kind of in passively enough in most cases to be able to capture it? And I think that's where it's starting to head towards.
Do you think that some of this AI kind of direction at the moment is not at the moment the kind of almost monolithic kind of approach which says, I'm going to give you an insight which you would never see? It's more around automating it. Like I kind of get the feeling that right now, if a quant was working through this same data, he would find this, or he or she would find the same kind of information or same kind of result of what to do, but just not as quick.
Yes, but I think it would take him a bit longer.
Yeah.
Because
for sure.
If you've got like a large language model doing all of the calculations for you, and you can build it in any which way, you can trade it in any which way. I think they would get there, but those LLMs are getting smarter and smarter.
More and more sophisticated.
Yeah.
And it's how you use it as opposed to it replacing, isn't it? It's how it enhances. And
going back to your original question, I think it is definitely an evolution. It's been happening for years. I think AI is quite a generic term. It's kind of getting under the covers a little bit, but it's been happening for years and years and years. People have been using algos and sophisticated machinery and learning, etc.
Now, right?
Absolutely, it's good for social media anyway. But But again, so that's happening. So it's definitely moving faster. Going back to the quality of data and access to data, it's just more accessible now.
Yeah.
Again, whether if you're talking in real time, you've got kind of providers like TNS, etc., that can help people. Barriers of entry are less. If you want historical data, then you can get access via the cloud, which obviously makes things easier. So suddenly the barriers of entry for firms to access that data, whether it's real time or historical, have made life a bit easier. And then they become more advanced on what they're doing in AI, etc. That's the way I take it.
Yeah.
So it's definitely moving fast. More players, more technology, but more access.
Yeah.
The other thing we've been speaking about, so if we look at this sort of shift strategically, we're also seeing a globalisation at the moment, and new areas of focus. I think every company and every meeting that I'm having at the moment, there's another thing that's sort of evolving in another area that people are getting excited about. And Rob, you're just recently back from Asia.
Yep.
There's some interesting things happening out there. What are we seeing on a global basis at the moment?
So if I take a step back and think about our client base, whether it's the buy side or the banks on that side, US options, US is still, again, it's just inundated with demands, requests, consuming data quality. To answer your question, you see Asia, I think pretty much every single meeting we went in, it's to do with China and India. They want access to that data. There are peripheral things going on. You just had Arrowhead with Tokyo happening at the end of this year, so you saw a little bit of interest on that. But again, that's still kind of that's an evolution as well, even that Japanese market for international players and the local players to access. And then you've got Australia coming up later this year with some itch kind of and protocol and becoming more sophisticated, pushing firms onto that side. But again, the fundamental thing is that everyone wants to look at access to the Chinese data and Indian data. Flip that round, you've then got those firms in those countries, they also want to access international data. So again, we've seen a lot of the Chinese hedge funds, quants, wanting to access the US data in the last 6 months. So again, it's a two-way thing. It's kind of firms wanting to access that data in those two markets and others, and then those firms in those countries wanting to access international data. And again, it's going back to what I said earlier about barriers to entry. It's there's challenges with both of those particular countries that I'm mentioning to access the markets, but people are starting to work it out, whether that's through partnerships or kind of investing in those areas. It's starting to happen more and more.
Yeah, it's getting. I mean, India in particular, and China, is so tough to get into. If you're trading mainland China, you have to go through. It's just a ton of regulatory and legal stuff you have to go through. Same with India as well. And there's an element of it which is because it's a bit closed off and because it's a bit protected from international firms, it makes it a little bit sexier to go and do the work and go and trade there. So a lot of firms have done the work and have set up bases and set up and got the licenses that they need to, and they're doing very well out there. But yeah, I think this year in particular, I don't know about the rest of you guys, but my mind is in a fog continually, and part of that is because of alcohol. The other part of it is because it's just been relentless with exchanges coming out with new things, and like a ton more incentive programs, or it's where you need to get.
It's hard because I think a lot of those exchanges are working it out themselves. So things are changing quite fast. So I like it does feel like a bit of a fog, a change, and whatever you say one day might change the week after. It's not because you don't know; it's just because things are evolving very rapidly. People are learning on the ground very rapidly. But it's an amazing market opportunity for everybody. And again, everyone, like you say, sexy. Everyone wants to get there, and no one wants to miss out. So it's making good.
It's quite interesting because I was with someone yesterday who was talking about the volatility. Just we've been through a phase over 2 years where there's been a lot on hold for various different reasons, and people waiting because of such big spikes. When you've got one major thing happening away, this is so many different things that people have almost, in my mind, over the last 3 to 6 months, said, right, the certainty is there's going to be volatility and something's going to happen somewhere. It's some part of the world. It's going to change the game quickly, so we might as well get on with it and move into action. And that seems to have been a major flow over what we've seen over that sort of thing. And people are seeing opportunities, be it in Saudi or India or China, wherever it comes up. There are more and more people are looking into, I'm seeing more about Qatar, Saudi, Dubai on a daily basis, and alongside all that sort of thing. And it does mean a rapid spate of change as well. I know you're doing a lot in the States as well, and have done through there. You're talking about States and China, etc. as well, and there's different things happening.
I chuckled a little bit when you said Saudi, because Saudi is a really interesting market at the moment. A lot of people want to be in there.
And a lot of people putting some big backing behind it.
They are, yeah, very much so. But it's quite an interesting dynamic in Saudi, particularly because whilst they are attracting a lot of this international customer base, I think they need to move on their matching engine technology and how they do their co-location. And at the moment, I think one of the challenges that Saudi are facing is they're getting all these firms that are working with, US, European markets that are quite, they've kind of been through that learning curve, and they've been through that aspect of, well, we need to make these technology choices to make execution quality better, all those things. Whereas I think Saudi are at the early part of that at the moment. So you're seeing some HFT firms that are going in there and just sort of looking around and saying, this, they really need to improve this, And I think they're finding challenges on that. I think India, coming back to your point and Rob's point, is they've moved on a lot. I think they had a lot of trouble with SEBI, and they were working through a lot of regulatory stuff. I think that's all settled down now.
Yeah.
So they are attracting a lot of sort of customers in. What I would love to see from NSE particularly, if you're watching, is opening the market up for fairness. For people like providers like TNS or other sort of members, making it easier to trade in there. I think at the moment it's very close knit. Like you, as an example, a service provider like TNS can't have a rack in there. You've got to be a broker, you've got to be a member to have a rack.
Yeah.
And there's a lot of liquidity that we could bring there, but it's still not, it maybe still teetering on the edge. So I think there's going to be evolution in that space, and I think particularly the quant firms for coming over from China are perhaps kind of finding their feet in the US market, which is very heavily regulated. It's not kind of like, you can get Joe down the road to go in and shorten your cable to the exchange. It's a lot more difficult. It's regulated. It's all kept quite structured. So I think that has been a learning curve that we've been, from a TNS perspective, going through with Chinese quant funds, and say, this is how the market works here. This is the things that you need to consider as part of that. And I think any organization, whether there's TNS, LSEG, whoever it is, it can't just anymore be about, well, what would you like to buy of us? It's got to be about, how can we help you? How can we work together? And that doesn't necessarily mean that it's got to be a sale for our respective organizations, but we are bringing value to the market, right? I get not everyone wants to do that, but I think that's one of the key things that's going to make the market move forward as a whole.
That globalisation piece is really interesting, isn't it? About everyone wanting to sort of move into different markets and going back to your point, learning about various different things. But it's learning at pace, isn't it? If we think about India as a marketplace, as a for example, the evolution there has just been extraordinary over the last couple of years from how quickly things have developed. I've just been speaking to someone at a major investment bank who's just come back from there and massively impressed with what's happening and the opportunity. How does that manifest itself over the rest of this year, do you think?
I think when you look at places like India, where you've got very, very entrepreneurial people, and they're just go-getters. So you've got the little prop shops making a ton of money. You've got the huge prop shops making a ton of money. And now they want to, they're done with India because they're like, look, we're good with it. So now we just want to expand. I think they're big. I think it's places like India and China in particular where it's getting access to capital offshore to be able to go and do that. I think that's going to be the big driver for a lot of some of that liquidity coming into other markets as well. But on the other side of it, it probably makes a lot of everything that we're doing, in our respective groups in all the geographies that we're in. A little bit more competitive because they are. Because I think that's kind of where it's heading towards.
I guess switching the focus a little bit, rather than sort of the on exchange, the lit markets. We've seen a lot of clever companies in the sort of the dark markets. The ATSs, the dark pools, whatever they are. I think Scott Bradley was in, if I'm not mistaken.
Yeah.
One Kronos. That's a great
that's
story.
the episode I was talking about. With
Yeah.
the switch from quality to from speed to quality.
Yeah.
It's his catchphrase through that particular episode. So.
Yeah, we do see a lot of customers, particularly asking for sort of access to those not lit markets. I don't want to use the term dark pools. I had a post about this the other day, but I'm not going to use the term dark pools.
Pools of colour.
Pools of colour. so it's not just about those. Well, where can we find that liquidity in sort of Eastern markets or wherever it is? It's actually, can we be more sophisticated with where we are trading? And those ATSs and sort of liquidity pools I think are going to be a key thing for that.
In the US especially, they are getting really, really big, almost rivaling lit exchanges. Intelligent Cross have been doing incredibly well. UBS has always been doing super, super well as well. But I think it comes down to information leakage. It's so much more difficult to have any of your strategy info leaked when you're in a dark pool. So no one else is going to try and run you over. And it is that sort of competitiveness where if you've got an order sitting on the book for too long, and you can't move it away in time, you will get run over. You will have some sort of adverse selection against you. So that kind of goes straight back into having good infrastructure, having good access to tech, sponsored access, for example, to be able to remove and place orders really quickly.
So I'm just thinking as you're talking, it's having access to data, and you think, LSEG's got one of the biggest, if not the broadest, data feeds in the world. And then when you look at some of the packet capture, the PCAP data we added last year, we added over 100, I think it was over 100 feeds in 1 year. So you think you've got everything, and then you've added another 100 feeds on top. It starts to make you realise how vast this is getting and how difficult it is. So again, it's just constant people wanting access to more data and different data, whether that be kind of dark, lit, OTC, it goes on and on and on.
Exchanges love a feed. It's like I love charging for a feed.
And you touched on it earlier, you've got machine readable news, which obviously, again, we've got within LSEG, again, that's something that's kind of growing, people get access to that data. So it's not just market data, so like you mentioned earlier, it's that news, it's kind of the quantitative analytical data, it's referential data, it just goes on and on. It's quite frightening. I think we were looking at some stats, and we've got like 60 petabytes of data sitting in the cloud on historical data. That's 60 petabytes of data at the moment.
That's just 1 day.
Thank goodness it's not. But again, it just goes at how difficult all this is, and people wanting more and more access. And again, it's up to our job.
That's the challenge, isn't it?
Completely.
That's the challenge and the opportunity. And I think the thing I love about this space is that there is interesting problems to solve. And when you talk about that being a challenge, it becomes a great thing for companies to come in there and relook at things and do things differently and get that advantage. If we're talking originally at the start of this about trading advantages and where your options are, winning the war with data to use it better, focus on that quality alongside the speed alongside it is a massive competitive advantage in terms of what we're looking at.
I think, also because a lot of exchanges now have started to get a bit savvy to the fact that you don't want to be, if you can charge a little bit more to send 2 bits of data down on 2 separate feeds, why not? US options people, we're looking at you. You've got your auction feeds, you've got your top feeds, you've got your depth, you've got your complex top, it's just ridiculous. It's just a number of stuff that come through.
It's a really good point actually, because the amount of times that we have people asking us for a particular venue, and then you kind of say, yep, we've got that venue, and then you've got to break it down to what part of the venue do you want to access, because the exchange has been quite savvy. They've been breaking it down, so if you want one channel, and have all the data. If you want another channel, and again, it goes back to what we said right at the beginning about quality of data. You don't want to miss anything. So if you're only getting part of it, you're not going to get the full story. So it's becoming even more difficult. So it's not even with the new venues, it's actually with the existing venues starting to break things down.
I mean, the equity options fees, actually, I've got to back you up on that. It is absolutely crazy. The amount of data, I mean, TNS have got basically every equity options feed on there. We've had to spin up dedicated 100 gig backbone throughout sort of New Jersey Triangle just to kind of move that data around. But it does come back to the exchanges where they are also charging an absolute fortune for these handoffs. And I think if the one thing I'd love to see is exchanges kind of looking at it and saying, you know what, the technical infrastructure is not where we should be making our money. It's the quality of data, it's how liquidity provisioning happens, it's the availability of the market. You know, that's where we, you know, and I guess this is more of a personal question. But, you know, it is. We look at it and we think we've got huge amounts of investment that not just us, but trading firms that do it themselves or LSEG, whoever, need to make. And I think that's one aspect which we would like to see, you know, well, I would definitely like to see an improvement on.
Oh, look at the opera data.
Oh, yeah.
I mean, yeah, it's
Goes up to 96 channels now, like microbursts up to 80 gigs, something like that.
But it's funny, but again, that creates opportunity. You know,
Yeah, it
selfishly
does,
this way for us,
It does.
it's fantastic. You know, if I look at Opera particularly, it's such a nightmare for people to manage themselves. So it's getting that build versus buy conversation in.
Yeah.
So historically,
Build
people, all build out,
Yeah,
hybrid. But historically, people are going, I'll do it myself. But when you start to manage that kind of data, that sophistication, you know, it's easier to come to a place that does it already, i.e. ourselves, and make it easier. But it's definitely a balance.
So we talked about globalisation and strategy. The other great thing that is moving at enormous pace at the moment is obviously the political scene. All across the world. That's there's a lot of you used the word volatility earlier on. There's volatility everywhere you look. There's lots of things happening. How does that impact the markets at the moment? What we've seen now?
So, I'm not a political expert, but
Disclaimer.
a disclaimer. Yeah, I think we do see patterns emerging. With sort of Trump winning the election recently. Him kind of coming in saying deregulation is a key thing. The markets responded quite positively to it.
Yeah.
Not so much recently with the hire and fire apprentice style sort of sackings he's doing. But it is, from a market perspective, I think that deregulation is always a welcome thing for trading firms. From a European standpoint, I think the Labour government at the moment is really going to have to find how to get this engine moving again, right, and get more kind of trading activity in. The biggest one is Revolut at the moment, who I think they publicly came out and said there is no value in listing in London. US is the way we're going to do it, and that is the biggest fintech unicorn we've got in Europe, and they are saying it doesn't make sense to list here. And they're not listed. There's no plans that we are publicly identified that they are going to list, but I think they just commented on it saying, why would we do it here? And I know LSE have been going on a bit of a campaign and saying, well, this is a great place to list, but fundamentally, unless the policy around it backs that kind of strategy, it's always going to be a struggle.
A couple of years ago, when we used to have companies coming out with these huge valuations, which were like completely unsubstantiated, and then you had the big correction, and then you've had and then this year as well we had Nvidia as well having all the Nasdaq was down a little bit, but I think particularly it's just been a very, very heavy momentum environment. Everyone just piling in, going one way. And for market makers, it's always going to be a struggle during that environment because there isn't anything to trade against. So I think there's been a lot less liquidity or good quality liquidity out there, and that's globally. So it started to retract a little bit. So I think until if Trump and Musk carry on doing their thing. We love a bit of vol, but we also love a bit of predictability as well. I think that's
and predictability's not been an easy word.
It's not well, I mean, quants love a bit of predictability, but they also love a bit of vol. But this is like kind of like flying blind in a car with no wheels, high on drugs sort of environment.
But it's interesting because that DeepSeek announcement that came out of like nowhere, like, oh well, we did it for a fraction of the cost, and our models are basically a little bit better than what Nvidia could do, and the share price just went whoom. And I can imagine there's a lot of people got caught caught off guard with that, right?
Yeah.
And he's like you say, a bit of predictability, just a bit of stability.
Yeah.
Ball's good, but yeah.
Yeah, nothing.
Give us a break.
Yeah, at least one night worth of good sleep
Yeah.
is what we're after.
Yeah.
So one thing's for sure, I don't think we're going to get an awful lot of that over the course of next year with where everything's moving globally. But let's have a look at what's happening on tech to round things off. There is if we're talking about everything happening at pace everywhere, the speed of evolution within tech, driven predominantly by the noise around AI at the moment, the players that we've already spoken about today, there is an awful lot of opportunity within that. So if we're talking about what we expect to see in 2025 and where some of the big heat will be in this space around technology, what do we expect to see, the common sort of threads there?
So I'll kick off on this one. I think you will continue to see the GPU kind of build outs and huge data centers, and some of the trading firms are quite public about that they are investing in huge data centers with big GPU grids and so forth. So I think you'll see more push into that kind of data analytics using that sort of technology. We, as in from a BlackRock perspective now, we've seen a lot of firms that are saying we want to squeeze the asset more, we need more performance out of it. What we are typically seeing in the co-location space is there is a massive shortage of power and space, especially in New Jersey Triangle. So what we tend to see is actually, can I squeeze that asset a bit more with the same power consumption that is taken? So as an example, from a BlackRock perspective, we've seen our business increase about 300-400% over the last 2 years, and that is from the traditional players that are in the trading space. More of the new entrants from Asia as well. They're sort of looking at it and saying this makes sense for especially the high sort of volatility that you see in the NSE. But we are seeing some of the more traditional, who are not really in the HFT space, saying actually we want to look at these systems for our own kind of benefit, for increased processing power and so on and so forth. And I think the last thing that I probably would say from a technology perspective is, whilst we did talk about the the move away from that low latency HFT space, the top of the triangle guys are still looking for an edge. They are still looking like, can I find a way to effectively beat physics? And firms have people dedicated to this, right? Like, what can I do to beat what is the common known physics of that medium or that kind of technology, and what can I do to make that better? So we're going to still see that evolution, but it's going to be less so, in my opinion.
Rob, your thoughts?
Well, you're always going to see the top of the triangle pushing the boundary. I think it's gone from lines to telecommunications to microwave to et cetera, et cetera. So I think people are always going to do that. I think for me, it's just being able to. It's the challenge of basically giving people access to data wherever they are in the world. I think that's a bit of a challenge because, again, like we said earlier, it's the amount of data you're consuming, particularly when it comes to historical data. Just trying to move it. So again, where are you going to access it? So if you're struggling to get into a data center in the US, for example, and you're based in Asia, how do you then get that data to be able to kind of do the analysis on it? It becomes quite difficult and expensive to do that. So it's making things easier for firms, whether it's through AWS and S3 or any other way. It's just making that, pushing the boundaries and making it easier from a cost aspect as well. When it comes to real time, I don't know. It feels like deja vu. I feel like I'm saying the same thing I did 10 years ago. It's the same thing. It's giving people access to data, but again, there's more channels.
Episode 1 with you.
Yeah. Just before COVID, I think we talked about it. But again, the point being is, it's just, we talked about China and India. It's people accessing that. We had their MiFID, didn't we? People wanted to access kind of some of the MTFs and making those data centers. It all feels like it's the same story, but different venues and different access points. So again, making people, these barriers of entry that I mentioned, making it easier and helpful for firms. That's it's technology aspect. Again, for me, it's cloud. We mentioned AI. I think again do those right, and I think we'll be able to help firms a lot more.
Yeah, that's the key, isn't it? Do those right. That's
Yeah.
that's the bit where people work with that, and rather than just sort of invest and say, right, we need to have a cloud strategy, we need to have an AI strategy, we need to build that
Yeah.
thing. It's like, what are you actually trying to get?
You think of how many firms probably went down the FPGA route years and years ago, and now we're starting to see that. I wouldn't say unwind because people are still using it in certain aspects, but it's definitely not the kind of trend or the kind of the glamorous world of that people thought it was at the time, and it's expensive to keep on top of it.
Yeah, it's expensive. It drives a lot of it, isn't it?
Yeah, we had. I think the FPGA point is super relevant now because you've got access to a lot more sponsored access venues, so you can go pretty much direct. And a lot of firms have started to repurpose FPGA to a bit more on the strategy side now, rather than execution or even on the market data side. And I think it's just going to continue moving in that direction. Everyone getting a little bit more savvy with and up to speed with FPGA development to be able to, to execute quicker, to be able to make decisions quicker, rather, especially with quants.
Yeah. Comes back to that quality and speed, doesn't it? all the way through. So I've loved this, and it's great having you all in here. Thanks so much for giving me your time. Let's wrap up with just a sort of a headline about the evolution of markets in 2025. If we're sat there and to sum up your thoughts about where opportunities are, what's exciting, let's have a final hurrah from each of you on what that looks like. Himesh, I'll give you the catch of taking that one first. Should never have sat in that chair, should you?
So, I think sort of some of the points I touched upon there is, you're going to see a continued growth in AI technologies.
Yeah.
We're going to see more liquidity access, so that is sort of off exchange, not lit exchanges, and that's going to grow. I think people like want Kronos and those sorts of firms and Tokyo Cross, they're going to I think they're going to see continued growth there. I think we're going to see the requirement for lots of data centralization. Where you're less focused on just being in every single co-location, every single exchange, and maybe be focused on a couple of key centers and just suck the data into that. So I think we're already seeing that pattern. We're going to see that more so. And I think probably from a latency perspective, I think we'll always continue to see the likes of Xilinx and all these sorts of firms be pushing the boundaries with what they are able to do with an FPGA, so that if you do need to do that, whether that be a fast execution or using a kind of strategy purpose there, is to utilize those chips in the right way for a given firm strategy. Yeah. So I think we'll see a continued evolution in that as well.
Perfect.
I think touching on your stuff, your points, so probably moving away from trying to capture every tick on an execution basis, moving towards those more periodic venues, more dark venues. I think that's where good liquidity sits now, and that's what a lot of firms are finding. It's just going to be, for me, I feel it's just going to be the continued rise of the medium frequency trade. It's no longer about being in a high frequency space. It's about kind of taking your models, your stat models, and just trying them out in different markets, and just lifting it up and just dumping it somewhere else and seeing how it works. And it seems to be working very well for a lot of firms.
Yeah, there's definitely some good returns coming back, isn't it?
Yeah.
It feels like there's some real winners at the moment.
Like astronomical returns. Yeah. I mean, some of those firms are richer than God, right? They've made so much money.
Very good. And Rob, last word.
Good. So I guess two things for us. So when it comes to packet capture and historical data, for us, it's just continuing to add on client demand. Middle East is something we've kind of started to add in the last couple of months. We've already added China and India, just making that data and making sure that we don't miss a tick and store it and make it accessible. That will just continue to grow. I think, look at the roadmap, we're just responding to everything client wants and access. And then on the real-time side, it's again, I think we're well positioned to add more venues on what I'm going to call, you call it medium latency. I guess we call it low latency because it's not HFT, but again, it's making sure we can give clients access to that kind of single-digit microsecond data. So again, making them having that ability, whether it's in colo, proximity, or in their data set, it doesn't matter. We're just do our best so that we can get that data kind of consumed in a real-time aspect, and again making sure the quality's there. It's fairly straightforward, really.
So plenty of evolution, plenty of opportunity, straightforward stuff, and I like the sound of it. Thanks to all of you for coming in and sharing that with us today. Really enjoyed the conversation, and thanks to all of you for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.